What's up guys, it's James Allen, the Out-of-State Investor, and today I'm going to give you the latest information regarding the housing market, and based on that information, whether or not I think we might be headed towards a housing crash in 2021. Now with that said, information is always changing, so my plan is to provide you guys with an update every single month so that you can be aware of the latest information and use that to make informed decisions, whether you're looking to buy a house, sell a house, or maybe even purchase an investment property. But before I break this down, go ahead and smash that like button. And if this is your first time visiting the channel, I buy rental properties and flip houses out of state, and I teach you how you can do the same thing, investing in real estate to build massive wealth in addition to upping your personal financial situation. So if any of that sounds interesting, definitely subscribe, hit that notification bell, and with that said, let's get started. Alright, so a good place to start whenever we look at the health of the housing market is the inventory levels. In other words, we want to know how much supply we have on the market, because supply and demand play the biggest roles as to whether real estate prices continue to go up or go down. Well, recently, the National Association of Realtors reported that we're currently at the lowest level of housing supply since they started tracking it back in 1982, almost 40 years ago. Now, this is a good problem to have if you already own a house, because you've probably seen some very nice appreciation because of that. Now, looking on a week-to-week basis, you'll see that we've kind of flatlined around 9 weeks of supply since the month of July, which is really low number considering this is nationwide. And you could see that when you compare that to previous years, right now we're at about 6 weeks less supply compared to the same time last year. It's pretty normal to see the real estate market start to slow down as you approach winter time, but as you can see, things don't seem to be slowing down at all for the moment. So that's a very positive sign for the real estate market to continue climbing up in price. Now, if we look at some of the local markets, we can see that LA is pretty much right in line with the national statistics, sitting at around 9 weeks of supply. The Phoenix market is red hot right now at about 7 weeks of inventory. Austin and Dallas, Texas are sitting at around 8.5 weeks, and Denver and Seattle are only at about 4.5 weeks of inventory, which is absolutely insane. So when it comes to inventory levels, the supply right now is really low, even in the expensive markets. So that is another positive sign for the housing market looking ahead. For reference, when we were in the housing market crash of 2008, it was not uncommon to find markets with over 12 months of inventory. So seeing some of these markets at around a month's worth of inventory is a very good sign for the short term. The next thing we want to look at is the number of sales. Well, recently it was reported that housing sales for October went up 26.6% compared to last October, but it also went up over 4.3% compared to the previous month. So not only are we doing better than last year, the amount of sales just keeps going up every month and is currently showing no signs of slowing down. Now, this is a really big deal considering we're at such a low supply of housing. You see, you wouldn't think we would be doing as much sales volume based on the low amount of supply, but this is a huge reason of why house prices continue to go up. In addition to that, let's take a look at how fast these houses are going into escrow. The amount of houses going into escrow in less than 2 weeks is up over 13% from the same time last year, with 43.5% of houses getting under contract that fast. But with that said, there is one thing we need to keep our eyes on. Pending sales is a great way to see what the near future holds for houses sold. And from what we can see on Redfin's data center is we're starting to see a fast dip on the number of pending sales. You could see here that it's pretty common for sales to slow down in the wintertime, but this is a week by week chart, and the amount of pending sales is dropping pretty fast. Also, since October, housing sales have also taken a slight drop in the past 2 weeks, so it may just be the upcoming winter time finally having its effect on the market. But if this continues to increase in velocity over the coming weeks and months, then it may be something more that we need to pay attention to. So overall, it's too soon to come to any conclusions as far as the future of housing sales go, but as of right now, sales are still doing really well. Now, although there may be some potential concern about housing sales, housing prices do continue to go up at a really fast pace. In fact, housing prices are currently up 15% from last year as of last week. And this is not only house prices, but the price per square foot is also up 12% from last year. It's so crazy that a senior economist with the National Association of Realtors said, and I quote, "We have never seen this widespread price growth." This is once again a great thing if you already own real estate, but you have to be wondering at the same time, how long can the housing market keep shooting up like this? You see, on one hand, you can't just assume housing prices are going to crash just because it's overdue, because that's not how it works. But at the same time, this does have a feeling of being in a bubble territory, which puts a lot of us on edge. In addition to that, mortgage interest rates have stayed around that all-time low level. In fact, they recently made new lows, which I think is playing a huge role to encourage a lot of buying activity. So mortgage rates will be another thing that we really need to keep an eye on over time, because if they start to change, then that could spell trouble for the housing market. As far as days on market goes, the number just keeps going down. It's currently sitting at an average of 28.7 days on market, which is about 15 days less than it normally is around this time of year. And at the moment, it doesn't show any signs of slowing down. So this is once again a very positive sign for the housing market in the short term. With that said, unemployment is one of the big X factors that can cause this whole house of cards to come tumbling down. And if we slip into another national lockdown and people start to lose jobs again and the unemployment rate starts to go up, that could be a big disaster for the housing market. So let's take a look at where we are as far as unemployment goes. The most up-to-date statistics we have are for the month of October. And as you can see, the unemployment rate has gone down 1% since September, which is a great sign. The unemployment rate has consistently gone down every single month since we were at our high of 14.3% in April. So all of this is very encouraging to see, and we're getting closer and closer to our pre-COVID levels of 3.5% unemployment rate. On the flip side, there are still 12 million Americans that are currently on unemployment that are about to lose their unemployment benefits. Now, one of the programs due to end is the pandemic assistance for self-employed, gig workers, and others that are not typically eligible for the unemployment assistance at the state level. In addition to that, some states only extended their benefits for everybody else to last until the end of the year. So without a new deal in place to extend these benefits, this could be a bad sign of things to come, with homes getting foreclosed on, which in turn would have a negative effect on the housing market. Now, with foreclosures playing a strong role in the 2008 housing crash, it's very important that we keep an eye on how things are going, not only with foreclosures, but also with active mortgage forbearance and mortgage delinquencies. And the latest information we have, according to Black Knight, is that the amount of people in active mortgage forbearance is continuing to go down. As of November 17th, we're currently sitting at 2.77 million people in active mortgage forbearance, which is down from the peak of 4.76 million in late May. It's also gone down more since my last video on this topic a month ago, which at the time was 2.97 million people. So as of now, things are still going in the right direction as far as mortgage forbearance is concerned. Now, regarding mortgage delinquencies, the latest information we have is we've seen a decline in the overall delinquency rate with a drop of 3.1%, which actually brings us back to pre-pandemic levels according to Black Knight. We've also seen a decline of 43,000 people when it comes to serious delinquencies since the pandemic peak. Now, serious delinquencies is basically anybody that's not in foreclosure that's more than 90 days behind on their payments. On top of all of that, foreclosure numbers are still very low at the moment, mainly because of the federal moratorium going on banning all foreclosures. There was a report recently talking about a 20% increase in foreclosures for the month of October, but it can be a bit misleading if you just read the headline and don't look any further. The reality is we're still down 80% year over year on foreclosures, although it is a bit artificial due to the moratorium. So with that said, it's not all good news to report, but things are still progressively getting better as a whole, and the recent increase is believed to be related to a lot of the houses that started the foreclosure process before COVID started. Also, it's important to keep in mind that Americans currently have the most home equity ever available to them. So many many of these people that are either in forbearance or delinquency will have the ability to sell their house to avoid foreclosure. Only a very small percentage don't have enough equity to sell their house without taking a loss. So all of this is something we want to keep an eye on, but my hope is that more and more Americans can get working again, and then hopefully we can see the amount of serious delinquencies continue to go down. So overall, what is my opinion on the current state of the market? Well, I think that from a nationwide overview, it definitely seems like we're heading in the right direction in a lot of different areas. As a real estate investor, I'm definitely taking this time to be both defensive and offensive. I'm taking advantage of this seller's market and selling some of my worst performing assets, but at the same time, I'm still buying great deals that I can buy below market value. I'm also keeping extra cash reserves at the moment while finishing up some more renovations on a couple of my rentals. This will help improve my overall cash flow across my entire portfolio, giving me that extra layer of protection no matter what the market does. Now, with that said, looking at the statistics, I love that the unemployment rate continues to go down. Housing supply and interest rates are still extremely low. Americans have the most equity ever available to them, and delinquencies continue to go down. These are all positive signs for the short term. In addition to that, housing crashes can take a while to happen compared to a stock market crash. So based on the data, it's starting to seem less likely that a crash will happen in 2021. You see, even if foreclosures do start to get filed and they don't renew any protection for that, the courts will get jam-packed with cases, and it will take a while for that process to have its effect on the housing market. If there's going to be a downturn or a crash, it may be more like 2022 versus 2021. But again, it's something we need to continue to monitor, and also keep in mind that real estate operates on a market-by-market basis. What happens in Los Angeles doesn't necessarily correlate to Phoenix, so it's important to look at your local data in addition to what's going on nationwide. With all that said, let me know in the comments below if you enjoyed today's video, and if you felt you got some value from it, go ahead and smash that like button. Also subscribe if you want to stay updated regarding the latest on the housing market, and also if you're interested in learning more about how you can build wealth investing in real estate and upping your own personal financial game, then you'll also want to definitely subscribe to the channel. Lastly, follow me on Instagram at The Out of State Investor. Thanks again for watching, and I'll see you on the next one.